For the past year and more, tech companies creating the building blocks for AI infrastructure, providers of massive computing capacity, have been the focus for many investors. However, attention is starting to shift to companies that can implement AI in their operations. Our guest says these changes bode well for some of Canada's publicly traded companies and may improve the country's lagging productivity. Let's get more from Khang, Head of Global Economic Research at Vanguard. Kevin, it's great to see you. And just to remind the viewers, Vanguard, of course, one of the world's great providers of ETFs, among other products. But I was amazed. I know you're not involved in the Canada business day to day, but you've got one ETF, the FTSE Canada All Cap Index ETF, with almost 13 billion in assets and a management expense ratio of about 1/5 of 1%. So you're known for low-cost products as well. When I think about those mutual funds with expenses above 2%, puts it in perspective. You're in the camp that says we're moving into AI Mark II, and the focus now will be on companies that implement this stuff profitably.
Yeah, good morning. And just before we move on to that, I would, I think there's one phrase that summarizes it all. It's called Vanguard effect, which basically is whenever Vanguard moves into a space, because that's what we care about, which is, the ultimate investor's investment outcome and success, that has a way of having a lot of positive externality for the end investors. Going back to your original question, so we've been saying this for a while. AI, we kind of view it as really one of those epochal technological advancements that we don't get to see. Really not every generation gets to see and experience. But when we first saw AI and its capability, our view has always been that it can have that really era-defining potential to boost productivity, but also really transform the way the economy works and is made up, as well as the way companies go about generating profits and doing their businesses. So the way we think of it is that this is going to come in phases, and our baseline view is that it's really on track to bring that transformative boost to productivity, both in US and Canada, as well as many other economies. But the phase that we seem to be in for now is something that is reminiscent of many other technological cycles in the past, such as electricity, such as mass manufacturing after World War II, where there's an intense deepening of physical investment that happens just across the economy. So it's somewhat ironic, but AI is your ultimate cognitive power tool that we can all relate to having used it, and yet it actually calls for a significant historic capital investment build out, and then that is generating a lot of excess demand for, the old economy sectors, such as industrials, materials, and energy. And that has certainly showed up in stock markets like Canada's. It seems like it's continuing to show up both in the States and Canada.
You are a financial economist by trade. You've done a lot of research in active portfolio construction, household finance. Have you had much time to look into AI itself? Or even if you haven't, what has surprised you about this surge of excitement over AI as an economist?
So I think this just maybe goes back to what I mentioned about AI, that it being a once in a generation thing, and its impact is going to be multifaceted, and it won't be necessarily everything happening all at the same time all at once. It won't be necessarily that, but it's going to have multiple really innings and phases to it, the way in which it diffuses. The way we think of it is that it tends to create some sort of a binary reactions from just about everybody involved. Some people kind of look at its labor market implications and wonder, oh, is that going to be dystopian? Are human beings going to have jobs? And that's a very particular dark way of looking at that. And then the other on the other end of the spectrum, there are views that kind of suggest that, well, it's all going to be just nirvana, where all of us will be very productive and all of us will be able to reap the benefits of it. Our view is a little more measured, and it's, maybe unsurprisingly somewhere in between, that it does have a lot of potential. If you look at people's jobs, any jobs really, and then look at all the tasks that people, have to perform for their job, there are things that AI's capability is going to be a huge boon to productivity, just because you can automate certain things away, and then you can help human workers do it better. At the same time, there are so many judgment-related tasks that just are simply still beyond the scope of what today's AI capability is able to replace. And that, combined with how human labor, the complexion of human labor has evolved every time we had this type of an epochal technological advancement, gives us the idea that this time is in a way not going to be different, in that it'll be very disruptive. And certainly there will be pockets and segments that will be more disruptive than others. But at the same time, on the whole, its productivity impact is hopefully and likely will outweigh some of the downside implications.
Just to close up, I know that you and your colleagues have done work on AI productivity in the US economy. If you could just switch your lens to Canada there, you did warn about US demographic pressures. I think by that you guys mean an aging workforce.
Correct.
And you say generally you're looking ahead to a surge in worker productivity. There is a risk that AI fails to meet expectations. Is there a prospect AI will help our lamentable productivity growth performance in Canada?
And the short answer is yes. And here I want to maybe make 2 points. The demographic, the aging, and as a result, the labor force not really growing, short of a dramatic departure in immigration policy. That's more of a longer-term trend that we all have to accept and then get comfortable with. So that's a fact. The economy, any given economy that is aging, is unlikely to get a huge support from that channel. That said, I want to make this point that if you look at the Canadian economy, it still derives the vast majority of its income from anything that's related to services. So the services sector, despite all the headlines that we hear, and then even just the TSX composition of emphasis, and its emphasis on the physical goods related economy, the actual income is generated for the most part from services, very, very labor intense activities. And what that means is that the field is really ripe for AI to come in and then really help generate and unlock productivity enhancement. And that actually is coming at a good time if you think about the longer term demographic trend, because before too long, and perhaps Canada has been experiencing some of this, we would be looking for more workers, and we won't be able to find the suitable workers absent this AI-based technological and productivity boost. So in a way, it will be a very, very productive and very helpful tailwind. That's our view. And it's not a definitive thing. There's a lot that needs to be unlocked and then it needs to go well. But that's where over 4,000 startups are working day and night across the globe, but mostly in the U.S. to really unlock the productivity potential of AI.